This is Justin Pulitzer. This is my weekend review video supplemental for Sunday, August 9th, 2020. So today was Jobs Friday, and I wanted to break this out into a separate segment for whatever reason. It just sort of struck me as the right thing to do. So we have the non-farm payrolls. The prior number had been 4,800,000. There was a slight revision down, to 4,791,000. The consensus for this number was 1,675,000, and we had a beat, 1,763,000. The unemployment rate went from the prior reading of 11.1%, which I've mentioned is, I think, a gross understatement, but this is always the case with these numbers. It was supposed to be 10.5, it was 10.2, so a little bit of a nice beat there. Private payrolls were a bit of a miss, actually, and there's a big pickup in government jobs again, which I actually think is a good thing, because I think a lot of these riots that are happening are, and this is again pure speculation, I think government bureaucrat employees, deep state, teachers unions, and students. That's my take. So if they're back at work, they're not out burning police cars. Manufacturing payrolls. This was a big miss, actually. So we got to keep an eye on this. Manufacturing. This could have been Boeing, that they had restarted the 787, and then I guess they stopped it again. So that's something to pay attention to. The participation rate was a little less than the prior, but the amount that people were being paid was a nice beat. So that makes up for a lot of wrongs. Average hourly earnings change year over year was still up. So people's pay is going up. This is, by the way, why I think the interest rates, and you'll see TLT analysis in the full video, I think had a little tick up, because there is a little bit of wage inflation here. I don't think it's enough to trigger the Fed just yet, particularly with the level of unemployment, but it is something to pay attention to, because this is where they will hang their hats on slowing QE. I don't think rate hikes yet, but slowing QE if they see wage inflation. That's anything significant. It is not yet. Okay, so just keep that in mind. Average, basically the work week, this was a little bit of a tick up. It has been stapled to like these mid 34s, and I don't see that changing until there's a repeal of Obamacare. Okay, they're going to avoid the Obamacare tax. Another thing we had this week, which was encouraging to me, was the unemployment rate was a little bit better than expected here, and of course, and the unemployment claims is starting to recede. I think we've put back about half the jobs that were lost. So that's a good thing. We're also seeing a pickup in some of the durable goods. Cars in particular are doing well, and that was confirmed by Carvana. Probably should have covered that in the weekend video. I think I'm going to do those. CarMax and Carvana. CarMax and Carvana I think are the best ones. And then there's always, there's a few others. Maybe we'll cover that. I don't want to get too derailed there. But that's my analysis of the employment situation. My concern, of course, is the hospitality industry, and if there is, further shutdown. But the idea that we now have government employees coming back to work, and now Chuck Schumer tucking tail and now wanting to reopen schools could set a precedent, and we could see a big puff back up in jobs, because if people are back at work, they don't have to worry about staying home and taking care of their kids or worrying about finding childcare. I know that's a big concern, because one of my dentists is experiencing that. The person who was doing their childcare is being called back, I guess, for teaching, and we're going to lose that, and if the shutdowns and stuff still continued in general, that could be problematic. But now if schools are reopening, people could go back to work, which is a good thing. I think the red states will do it. You'll probably have some blue states that resist, but with New York opening, it's going to put a lot of pressure. So keep that in mind. Cheers.